Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market technicals and sector rotation. This video presents a direct informational narration of the source document. We're going to unpack the underlying macro data, explore the ongoing capital rotation from semiconductors to software, and dive into specific technical targets for major tech components. Here's a quick look at our agenda. We'll start with a macro foundation, then check out the big semiconductor shift and the software breakout. After that, we'll look at the technicals for ASML and TSM, Broadcom's massive growth, and finally, the trajectories for NVIDIA and AMD. All right, let's jump right into Section 1, our macro foundation, focusing on volume and data. To set the stage here, trading volume has really contracted post-holiday. Even though you might be seeing some headline index gains, the data shows a distinct lack of aggressive buying right now. Why is that? Well, take a look at the June ISM Services PMI. We're definitely still in an expansionary phase. The overall number is sitting at 54.0, but momentum has noticeably decelerated with business activity at 55.4 and new orders at 55.1. So while the economy is expanding, things are slightly cooling off.
That brings us to Section 2, the semiconductor sector shift.
A subtle but really critical shift in market sentiment is actively unfolding as capital reassesses these high-flying tech sectors. On one hand, semiconductor and memory momentum is definitely cooling. We're visibly seeing lower highs and lower lows. But on the flip side, the software sector is absorbing that rotating capital and has decisively broken out of its slump, pushing right above key resistance levels. If you're watching the technicals, here are the floors you need to care about. The broader semiconductor index has a critical support zone resting between 554 and 582. Meanwhile, a major memory player like Micron is sitting on support between 81 and 963. The data indicates that if these key structural floors are breached, we are looking at a definitive downtrend. Moving on to Section 3, the software breakout, and Microsoft. As we mentioned, software is rapidly absorbing this rotating capital, and this is being buoyed heavily by long-term expectations for Microsoft's AI monetization. Based on forward valuations projecting out into mid-2027, Microsoft's long-term price target sits aggressively above the $600 mark. Next up is Section 4, looking at the technicals and market expectations for ASML and TSM. Turning to semiconductor equipment, ASML presents a highly distinct setup. Look at these targets. Aggressive outlooks are sky-high, somewhere between 1406 and 1550, while moderate targets sit between 1300 and 1400. However, a conservative outlook places the downside risk near the 1000 level if broader sector weakness persists. Then we have TSM, which acts as the crucial midfield of the entire AI supply chain. They're absolutely indispensable for both offense and defense. Essentially, TSM functions as a necessary conduit for global semiconductor manufacturing, completely regardless of which specific technology ultimately wins out. Now for Section 5, Broadcom's highly robust growth narrative. Broadcom continues to demonstrate a massive growth narrative, specifically fueled by this exploding demand for custom chips. Just check this out. Boasting a staggering 48% 5-year compound annual growth rate, Broadcom actually holds a slight fundamental growth edge over NVIDIA, which is sitting at 41%. However, investors must remain highly disciplined here. Broadcom's critical support zone sits right between 324 and 365. Breaking below that 324 level would signal a severe macroeconomic narrative shift and the potential for significant downside. Finally, we arrive at Section 6, analyzing the shifting trajectories for NVIDIA and AMD. There's a definitive market transition underway for NVIDIA right now amid evolving market maturity. We're watching it structurally shift from an early-stage hypergrowth AI darling into a mature, steady-growth tech giant. What this means is that its explosive expansion rates will naturally moderate as its market cap stabilizes. As for AMD, it's currently holding its medium-term support zone, located between 500 and 552, but it remains highly vulnerable to negative macro catalysts that could trigger a rapid unwinding of sector leverage. So, as market momentum normalizes and capital shifts towards sustainable growth, the critical question is whether you are prepared to navigate this technical transition. As capital rotates and extraordinary growth rates begin to normalize, is your portfolio appropriately positioned for the market's transition to maturity?